Hello, and welcome to track number 6 of Cultivate Africa, focusing on technology and innovation. I'm Alicia Miller, and I'm Vice President of Strategy and Partnerships at Digital Green, and I'm so glad you joined us today in our track for this conversation. For those of you who don't know Digital Green, we're a global development organization that leverages the power of digital technology and grassroots partnerships to empower smallholder farmers and help them increase their incomes. Digital Green is the track lead for technology and innovation, and we've elected to focus on digital technology in particular. We want to thank the African Union for entrusting us to facilitate this important conversation today. And I want to thank the panel that we have, which is truly excellent. Before we jump into the panel, I wanted to give you a sense of what the 2 days are about. Today, we'll be discussing 3 things. First, digital transformation in the agricultural sector on the continent and how this contributes to resilience, a bit of an overview. Second, we'll be digging into concrete solutions that are reaching farmers in the last mile. And third, we'll be talking about the actions that are needed to take them to scale and barriers to scale. As is inevitable these days, we'll also be talking about how COVID-19 has affected these issues and learn what we can do to build greater resilience to this shock, as well as future shocks, whether they're health, economic, or climate related. Tomorrow, we'll be discussing the little discussed back-end architecture and infrastructure that these digital innovations rest on. This part of the equation is unknown to many of us, including me, up until a few months ago, but it can't stay that way. Yes, it's a bit more technical, but it's so critical to the health and sustainability of the digital ecosystem that has developed and the one that we need to build in the future. I hope that those of you who don't know very much about the digital backend or digital architecture will come back to learn and see what we need to do to move that forward. In both dialogues, I'll aim to highlight the actions and solutions that we can take away from today's discussions to our own organizations and geographies, and most especially we'll be highlighting policy actions for the upcoming AU ministerial dialogues. Throughout both days, we'll occasionally use polling to keep you engaged and sort of test what your knowledge is on various topics. And we would encourage you to participate in panelist questions. We'll tap into the panelist Q&A about halfway through the panel so that we can make sure to ask the questions that are burning for you. And while we're speaking of polling, I'd just like to ask the organizers to put our first poll up. We'll come back to this when we start the panel and just look at the results, but they'll get that panel fired up. And now, without further ado, I'd like to introduce our first speaker. We are so pleased to have Edwin Macharia, Global Managing Partner at Dahlberg Advisors. He's going to help give us an overview of the digital agriculture landscape, what's been happening with COVID's impact. And as many of you know, Dahlberg has done some very important work on this topic, and we're so thankful he's agreed to share these trends and an overview on the continent. So Edwin, we look forward to hearing from you and learning from you. Over to you.
Thanks a lot, Alicia, and hi, everybody. It's a great pleasure to be on this conversation and on this track for discussion. I apologize in advance for everybody who's looking at my shaggy hair and wondering what's going on. Unfortunately, COVID means that many of us have not had a great relationship with our barbers, and so hopefully you'll forgive us for not looking as snazzy as we typically do, but instead focus on the conversation and the content that we want to have. I'm going to talk about the digital agriculture side, and I'll walk through a quick presentation. And so as I pull this up, want to start with just a very quick background of Dahlberg and who we are. So as you can tell from the slide, we were founded in 2001. So we are really looking forward to celebrating 21 years of existence. And we have built a fairly interesting platform and footprint across the world. As you can see, 30 locations across the world, which makes us actually the largest impact first advisory firm globally. But more importantly, for this conversation, we are the largest top-tier strategy advisory firm in Africa, given our 10 locations across the continent. You can see the number of countries that we've worked in, about 110 globally. In Africa, we've worked in all countries other than 4. We have 50 plus nationalities represented, 95 plus languages spoken, and very proud of this fact that we have a fairly strong gender parity across the firm that we've been able to build in those 19 years. And so that's the basis for a lot of the conversation and kind of collective intelligence that I hope to bring to this conversation. Right at the top, it is important to recognize that some of these words are used interchangeably, but actually the ag tech is a much broader field. Ag tech and digital agriculture are not exactly the same. There are panelists who you'll hear from shortly, for whom their work sits very much in the agriculture technical, the ag tech side, whereas the focus of my conversation, just to give us a base for discussion, is going to be very much the digital agriculture side, which generally has these three elements around digital ag infrastructure. So agriculture data, agriculture hardware and software, and trying to, that is core infrastructure that then gets utilized in 5 broad use cases. One around advisory and information services targeting farmers, market linkages, financial access, supply chain management, and macro agricultural intelligence capabilities. And this slide just gives you a quick sense of the types of firms that sit in each of those elements, right? So on the advisory services, there's an example from Myanmar. On financial access, there's an example from Farm Drive in Kenya. On the supply chain management, there's Veritas that does coffee sustainability value chain management across Africa, Asia, and Latin America. There are market linkages initiatives, of which BJAC in India is one of them. And then Grow Intelligence is a great example of an institution that's offering APIs that blend satellite, socioeconomic, and private data sets to really give macro level insights into what's happening with the agriculture ecosystem. In each of those, so if you think about each of those, when you look at each of those dimensions, there's a couple of critical learnings that we had when we pulled. We did some research work this in 2019 before all of us knew COVID was going to happen, which was then a report that was published end of 2019, early 2020 with CTA. And there were a couple of important learnings that I'd like to share with you all. The first one, of course, is this is a large and fast-growing sector. We counted about over 400 digital for agriculture enterprises in Africa only. Cumulatively, about 33 million registered farmers across the different use cases. And you're seeing anything between 40 to 50% year-on-year growth across users and enterprises. But the final point is just as important. That is still very low penetration given the demand and the numbers of small-scale farmers that exist on the African continent. We're also seeing substantial migration in business model focus across the sector. The initial wave, the first wave of solutions, initially were focused on this digital market linkages on the advisory side, literally just giving farmers access to information on either how do you grow crops better or and how do you do agriculture better. But we've seen those begin to transition to have more digital market linkages, programs, supply chain management tools and efforts, a focus on agriculture finance, and just as importantly, this emergence of end-to-end super platform models that are aggregating not just one use case, but actually multiple use cases in supporting farmers. The third one is often is a natural thing that people talk about the number of users they have registered, but registration is not equal to use. In some of the examples, you see substantial difference between how many people are registered on a particular platform, especially on the early days of marketing and trying to get farmers on board, and how many actually actively use it going forward. And there's also a significant drop-off between use and impact. Are you actually seeing large-scale impact of farmers' lives being transformed with each particular use case? And it is important to recognize that those drop-offs happen quite a bit. So if you're people who are looking impact investors or people who are financing and impact is your primary metric, the ability to move from registered numbers of farmers down to what is the impact being had is an important conversation to have with your partners. There are growing revenues and funding, but the sector is still very small relative to its potential. So as you can see, 2018, about an aggregate revenue of 127 million euros, grant funding of about 175 million euros, and investments of about 47 million euros in 2018, which is a significant jump from just 1 million in 2014. And there's still a lot of headroom to go in terms of backing commercial enterprises. It's still early days of commercial viability. As mentioned, some of those revenues are, the numbers are still, 127 at an aggregate level. Most of those enterprises are not profitable or sustainable as where they are currently. And so it's important to really push the thinking on how do you get to commercial viability or sustainability, depending on whether you're coming at this from a non-profit side or a for-profit, even if it's a social enterprise side. The impact evidence is patchy but highly promising. that you're seeing, at a micro level, that these things can be truly game changing, right? You're seeing anything between 50 to 300% yield increases in different farmer groups and different models that are being put out there. And you're seeing, substantial 20 to 100% increases in farmer incomes when you stack up the use cases. But of course, additional work needs to be done to really unpack this and see where these things, where is the greatest value being had, and how do you make sure that you're bringing the right combination of support services to your farmers. And then the final one, of course, is, in a nascent ecosystem, there's still many gaps and the need for significant sector support, especially in what you'd think of as baseline elements. So donor coordination for sure, access to good quality data that allows people to make decisions and pursue opportunities and markets appropriately. The investment of digital agriculture infrastructure and in terms of public goods. So access to internet, access to hardware, taxation, all of those things dramatically impact the ability for enterprises to be to get to commercial viability, if not actually, and not just scaling. And then, of course, policies that different countries bring forth. And then my last slide, and then I'll be, then I'll hand back to Alicia, is this question of the emergence of super platforms that we are seeing. Initially, the focus was on each almost an independent use case, one use case type of enterprises. We're seeing that those are increasingly expanding, and you're actually seeing a couple of super platforms are trying to aggregate, either build from within and expand, because they're addressing interesting challenges that their farmers are facing, or just being an aggregator, and rather than building the thing and saying, how do we bring in best in breed, best in class to support us on this particular dimension that we don't have. One thing that then I will add is, Alicia, to your question of what's happening with COVID and what are the kinds of impacts that we've seen. I would say at an aggregate level, you are beginning to, we are seeing a divergence in terms of a number of companies and entities and initiatives have scaled because they have either been able to lean in engaging with farmers in times of COVID, where social distancing was not possible, and cashless systems were highly encouraged and will likely continue to be encouraged, or they had cash reserves to be able to survive. Which then you can imagine is the alternate is those who haven't done well are those who, their cash reserves were so narrow and thin that they couldn't take advantage of this space that was being created as, by COVID in some ways, by things going digital. And also on the other side, that their business model was no longer sticky enough, or farmers and users were unable to pay for it because everybody's wallets were impacted. Going forward, a couple of quick reflections from my end. I think it's important for every enterprise head, leader, investor to ask the transformations that we've seen, how sticky are they? Are these things that will last for a long time, or are they particular blips? And therefore, are you planning and investing on a base of quicksand, or actually are there things that have fundamentally changed in the way farmers operate, distributors operate, supply chains operate, that you can take full advantage of to continue scaling your enterprise? The second one is what I talked about, the super platforms, is asking, are you part of or are you building a super platform that is increasingly able to provide multiple channels, able to solve multiple pain points for farmers, so you become almost a one-stop shop versus being a one use case, and therefore potentially get left behind on this macro trend that we are seeing. And then the final one is, we've also seen in many of the countries almost that urban to rural migration happen, which means the kind of base of farmer and their savviness and the ability to engage with more sophisticated capabilities, that has gone up. And so again, to that question, is that sticky or is that short term, is part of the conversation that people who have seen a significant jump in their users over the last 9 months or so when COVID has been around, to ask, are those really sticky changes? And do we believe that those people will be there? Or the minute we figure out we have a vaccine, we figure out how we're going to live with COVID, that number and that stickiness will actually go back to normal. And then you'll have essentially a bifurcated user base. But this is a conversation. And so looking forward to hearing questions from the audience, and more importantly, perspectives from the other panel members. And so I'll hand back over to you, Alicia, to introduce everybody else, and looking forward to the discussion.
Thanks so much, Edwin. That was a really great overview, and we've got lots of questions to come back to you on. From that presentation, I made some notes about wanting to learn more about commonly bundled services. I want to talk about the stickiness issue, which I think is a question globally about some of the behavior changes we're seeing in COVID. So really good stuff there for us to dive back into. Before I go to the panel, I just want to thank the audience for participating in the poll. I won't repeat the whole poll question, but it was a question about access to mobile phones among sort of the lowest income quintile. And the data that we pulled this from was actually a 2016 World Bank report. So this would actually be an even higher level of mobile phone penetration. And you notice it didn't say smartphone, mobile phone. The correct answer is actually 70%. So we have a pretty high rate of mobile phone penetration already, and that was in 2016. So access to a simple feature phone, high even among very low income quintiles. So I won't go too far into that response, but just wanted to kind of reset expectations, I guess, about who's accessing some form of digital technology, even if it's the most basic. Moving into the panel, I'm going to introduce each panel member as I speak with them. I think if the organizers could have everybody on the screen, that would be great, because we'll start bouncing between people at some point. But I'm going to start our conversation with Vinay Vutukuru. Vinay is a senior agriculture specialist at the World Bank, and he leads the agriculture portfolio for the bank in Kenya. And Vinay, we just heard a really great overview about sort of the trends that we're seeing, but we also want to start talking about solutions. And I was hoping you could lead us off talking about the 1 million farmer platform that the World Bank is supporting. Could you explain what that is, what the aspirations are? It sounds like it's in the name, but we would all love to learn from that. So if you could get us started, I'd appreciate it.
Thanks, Alicia, and thank you so much for inviting me to this very interesting panel. And I think this is a nice segue to the presentation made by Edwin. And Edwin spoke about how I think there is a clear shift towards platforms which enable farmers to access bundled services. So the 1 million platform is one such platform. So let me just give you the context in which we launched this platform and where we are and what have we achieved so far. The World Bank here, if you look at in Kenya, we have two large investments, the Kenya Climate Smart Agriculture Project and the National Agriculture Rural Inclusive Growth Project. Both these projects cover all the 45 rural counties here in Kenya, and the cumulative investment about $500 million. And in a nutshell, these projects are about mobilizing farmers into farmer producer organizations across specific value chains, building their capacity and enabling their access to inputs, extension, and market linkages, and also making the accompanying value chain investments. Now, we realized that one of the biggest kind of bottlenecks or constraints is the last mile service delivery. And it's in this context that we launched a challenge in April 2019, where we invited homegrown kind of agriculture tech startups in Kenya to come and pitch as to how they can actually solve the last mile service delivery problem along 4 areas, basically productivity enhancement services, access to financial services, market linkages, and data analytics. And we got a great response, and through a rigorous selection process, we identified 14 startups who are then facilitated to have MOUs with the public sector in the form of county government. So as we speak, we have 15 active startups which are partnering and working on the ground with 16 counties. And the idea was very simple. Through the bank projects, we have a lot of what we call the public good investment, which is mobilization costs, equipment costs, infrastructure costs. So what we thought is, can we really complement this public good investment with the innovation of the active startups, whether it's JHill's Hello Tractor, or a startup called DigiCow, or even Digital Green, which is also one of the 15 who are working with the counties. And so in a way, this was a win-win-win solution for the counties. It meant that through the partnership with these active startups, the last mile service delivery was being transformed. For the farmers, it meant that they're able to access extension, market linkages, or inputs through these active startups in a much better way, right at their doorstep. And for the active startup, it meant that the farmer acquisition cost was much lesser because that was coming through the bank investment. So in that sense, it made it easier for them to scale up. So I think right now, as we speak, we have about 65,000 farmers, not just users, as Edwin said, who are actually using the services. Our aspiration is we have cumulatively 1 million farmers who are part of these two projects in Kenya. So over the next 3 to 4 years, we'd like to have more counties coming and partnering with active startups. And we want more active startups to be part of this partnership. And cumulatively, we hope to cover 1 million farmers. Just one last point before I kind of hand it back to Eliza. I think this is a great model because I think across Africa, you'll see that because of the fiscal stress and more so with the COVID coming in, the ability for the public sector to employ more extension personnel is going to be limited. In this context, the digital services through these private sector, I think is the way forward because it enables access to extension services, a variety of extension services and market linkages for farmers without the public sector actually investing heavily on extension personnel. But I think what is very, very important for this to happen is an attitudinal shift from the public sector to be open to such private sector partnerships and also make some, I would say, accompanying authorizing investments in terms of mobilization of farmers, having a good farmer database, which will make the job much more easier for the active startups. And of course, for the private sector, it needs some patience because partnership with the public sector can be much slower than it is usually for these active startups. But that patience in the long run, I'm sure, will really pay them handsome dividends. I'll stop here, Elisa.
Thanks, Vinay. Just a quick follow-up question before we go to our next panelist. I just wanted to come back to your point on how public sector is going to need to get more comfortable with partnering with different kinds of providers, including private sector. Could you just say a little bit about what you think the discomfort stems from? Is it about making sure we have accurate information being passed on to farmers? Is it about having to manage so many different kinds of partners? What are the sort of discomforts or adjustments government needs to get used to?
It's a combination of the two you mentioned, Elisa. Plus, to be very honest, a kind of some basic kind of, I would use the word mistrust that is the private sector kind of taking away too much of profit at the cost of at the expense of the farmer. So I think that's more a behavioral thing. I think being convinced that there's a pie where something can be shared both by the farmer and by the private sector coming in is a critical concept. So that basic misunderstanding that maybe private sector is out to also pick up the share of the profit for the farmer is something that needs to gradually shift.
Thanks so much. Appreciate that. We'll come back to you with more questions, but now I'm going to move to our next panelist, Josephine Mingi. Josephine is the CEO of an organization called Britain, which is based in Tanzania. Britain stands for Building Rural Incomes Through Entrepreneurship. Josephine, thanks for joining us. Glad to have you here. I'm wondering, just to start off, could you tell us a little bit more about Britain? And can you talk about the role that you've seen digital technology playing with the farmers you work with over the last couple of years and this year, how it's been changing?
Okay, thank you, Alicia. Thank you very much, and I'm glad to be on board as a panelist. So I'll just talk about Brighton a little bit and say that Brighton, the long form is Building Rural Incomes Through Entrepreneurship. We started in 2011, and as you have and agriculture transformation through agriculture development initiatives designed to facilitate market access, enhance agribusiness competitiveness, increase productivity, and improve access to inputs and finance for value chain actors. So our biggest work has been, and our entry point has been, smallholder farmers. And our job has been to integrate them into value chains and commercialize their farming so as to move them into a business frame of mind that harnesses their competitive advantage. So what do? Our approach is basically understanding the market system and understanding what is it that's going to bring about a large systemic change. We work closely. We all know that farmers operate in a complex environment, and we work with all the market actors, the government and the smallholder farmers, to develop business consortiums that are built on foundations that can be replicated across other value chains and are sustainable. So let me talk about our work and what we've done under digitization. Initially, our digitization interventions focused on provision of information, mainly market prices, extension information, as well as aggregation of inputs and to some extent aggregation of produce to smallholder farmers. And I did see one of the platforms put up by Edwin, the Farm to Market Alliance, which we actually were partners on in Tanzania. So for SMEs, we worked on inventory management systems that included ordering. And as we said, these digitization interventions, they started well, but were not sustainable beyond the life of any of the projects. So what we saw is that farmers, and especially the older farmers, do not adopt the systems well, as they didn't find them very relevant to themselves. Most of these apps were managed by farmers themselves and the SME themselves, and once the projects ended, then the apps ceased to be used. They were used one time, worked very well, and then they ceased being used. So our analysis of the why, and in reading up on research being done, it's clear that the biggest impact that farmers appreciate is receiving their payments directly on their phones. So we're going to talk about mobile, the mobile phone being the technology, however basic it is actually what will unlock digitization. Versus having to go to the cooperative or the bank, which is based far from home, to access their funds from sale of goods. So interventions that have begun with creating efficiencies in transactions, we have seen are able to encourage to aggregate their produce and inputs. And we realize that we need to begin digitizing transactions to enable the older generation and the farmers right now to begin the process of digitizing, but also to increase the number of youth in agriculture, since they're now able to use their phones. And as we all know, youth and phones are, you know what we are talking about. So we feel that the fulcrum of digitization in agriculture is digitizing agriculture transaction. So what do we see happening in Tanzania? As we said, a large penetration of mobile phones, with over 85% of the farmers that we're working with, including women, owning a phone. Smartphones are not as prevalent, as you know, because of network and of course they're expensive. So what this means is that farmers are now able to access information using the two-way communication from other members of their cooperatives or farmer organizations. And they're now able to transact through mobile money. So the other thing we've seen is that there's an increased move by buyers, and these are off-takers of produce, to pay through mobile money using the mobile wallets. And for buyers who are self-aware and are sourcing directly from the smallholder farmer cooperatives or the community-based organizations, they actually pay directly to the individual farmer, pay the fees to the cooperative, ensuring that the individual farmer actually gets their money directly on their phone. This has mainly been used in cash crops, and it does create a level of transparency that's important for the market system to continue to operate efficiently, as the farmer and the trader then have peace of mind in terms of money. We've seen agro dealers and agri input retailers receiving payments through mobile money for inputs. And then when farmers are able to send and receive, it makes them begin to see the importance of using the mobile phone for other things. So it's all about transaction. So what is the issue? What are the issues and why adoption is not so good? And I think we've had most of it. Is one, it is who developed the app and why. And I'm glad to see that the World Bank has gone to private sector in terms of developing. And so the trouble with many of the interventions and applications that have been designed is that they are designed from a development perspective of what we think the market actors, and the farmers included, need, but are not designed by them to solve the problem and create efficiencies. The development of the concept and the investment process should not come from us, but from market actors in those value chains or service providers that feel it is an opportunity for them to make profits by making the system sustainable. Investments should therefore be made to pilot the intervention. Just what the World Bank is doing. Invest once the ideas come in and the design is there, then we test them and we pilot them. So for us to digitize agriculture, mobile companies and other players in the value chains must begin to offer these services that farmers would like to access and make payments for. Secondly, the services offered by mobile companies are targeted at employed people. Take the mobile apps that you have, the mobile money app, look at it and you'll see that the target is urban dwellers. There's water bills, electricity bills, shop online for certain products, clothes, and everything else. But nowhere can you find a link to purchase maize in Kibaigwa, which is one of the biggest maize markets in Tanzania, or pay the cattle dip services, or pay for the purchase of a cow at the auction in Karatu district. The third is a high cost of mobile transactions, leading to a preference to cash out one big transaction, and hence do subsequent transactions in cash. We are seeing that once farmers are paid, they're selling their produce, they immediately cash out from the mobile wallet, which means, and any other subsequent payments are made in cash, any other purchases are made in cash. Of course, as a result of the cost of transactions, but also the fact that there are no other services offered within the payment service. So if the farmer wants to buy a cow or any livestock, which they normally do as savings, they do this in cash. The system must be developed in a way that the farmer is able to use their money within the same system, making the system more relevant to them. And this applies also to the SMEs and the agro dealers who receive payments in mobile money, but also pay follow-on for their bulk inputs in cash. So what are we seeing as the role of digitization? We see that digitization can make service provision cheaper for both the service provider and for the farmer or the business person accessing these services. So as market facilitators and market development experts, we are talking about bundling of services. For instance, bundling crop insurance with individual loans, which of course the mobile companies are now providing, as well as enabling transactions for inputs and payments for produce to be done through the mobile phone for it to be ideal. Partnerships must begin between mobile phone companies and other service providers to make these services more efficient for the value chain actors, enabling them to transact their business this way. And I believe once COVID came through, I think the biggest thing we saw was transactions actually being done through mobile money, people ordering things online. But because the systems are not as efficient, then they didn't do so well. What this will do also is to increase the reach of services, not only to farmers in cooperatives, in the collectives that we're talking about, but also for those not in cooperatives who are able to aggregate their produce, knowing full well they'll be paid directly. So therefore, they're able to take their produce to where the aggregation center is and are able to access other services such as loans and inputs. As we know, this constitutes the majority of farmers, the people who are not in cooperatives. This will also enable individual farmers to access individual loans and build an individual credit profile. So Tanzania is leading in putting policies in place where mobile money operators are now registering as microfinance operators. And this is a huge advantage for farmers and SMEs. We've seen it as a huge advantage because if mobile money operators are actually microfinance operators, it means that the people who are unbanked, who are not able to access banks, which are basically in the urban areas, are actually able to save, they're able to borrow, and they're able to transact. And this makes a lot of sense. So that we stop, this will reduce the number of interactions that we have. So the linkage of the mobile telephone line with all your other identification and businesses that Tanzania is doing means that we're heading to a point where individuals will be able to access loans without the traditional collateral. So this is the role that we see. The mobile phone, however basic it is, I believe it is what will get us to where we are in terms of digitizing agriculture, because the farmers need to integrate into the value chains and the value chain actors need to drive the digitization of the process. Thank you.
You gave us so many rich examples there that we can talk about and come back to once we're back in the full panel. And you mentioned bundling again, which is coming up over and over. You also talked about sort of the importance of the experience of the farmer with digital services. And you mentioned that during COVID, people started buying more online, but they didn't do so well. So first experience has to be a good one. I am going to go to Jahil next, but I want to ask you real quickly, when you said that their first experience, maybe wasn't such a good one, Was that again because these platforms weren't built for the kinds of transactions that they wanted to complete, or some other issue? I just am curious about that because it is so important that to that stickiness issue that Edwin brought up, that the experience be a good one when you adopt a new technology. So could you say a little bit about that?
Yes, it's because the platforms are not built for exactly, I mean, they do not address the problems that or the challenges that they're having. So they do not address, I want to buy a cow, I want to pay for it, I want to be able to access credit. That didn't happen. And so the experience was not a good one. And so when we start again, I think we need to look at it in terms of solving the problems that they have versus the problems we think that they have.
We'll be coming back, and just want to remind the audience, we are seeing some of your questions come in, and I will start to ask them soon, so keep them coming. But before I do, I want to go to our next panelist. We have Jihil Oliver, CEO of Hello Tractor. Thanks, Jihil, for joining us here today. Really appreciate it. You focus on access to mechanization services, but not necessarily ownership of a tractor. And I want to, I mean, obviously someone owns the tractor, and I'm sure you'll talk about that side of the business as well. But how important do you think these sort of shared services are combined with digital technology? Could you talk a little bit about your model and about that and how you see it in the future?
Yeah, and thanks, Alicia. Thanks for the invitation. Of course, we think that digital technology is important to promote a more sustainable, equitable ecosystem. We came into the Africa market with a collaborative consumption model for tractors because individual farmers, of course, as we all know, grow on very small plots of land. And it's just not, it doesn't make economic sense for an individual growing on, where we started in Nigeria, the average plot size is 1.1 hectares. It's even less in Kenya, where I'm sitting today. It doesn't make any sense for that individual to own their own equipment, right? The typical tractor in Kenya is roughly about $27,000. In Nigeria, it's a little more, $32,000 plus the cost of capital if it's a finance machine. So it just doesn't make sense to own it. And so, what we thought was if we can first provide assurances for an investor to become comfortable in investing in a tractor as a business asset, and then connect that tractor owner to farmers who are geographically dispersed, working on these small plots of land, aggregate, and I heard the theme of clustering quite a few times, but the idea is, can we help cluster the demand across these geographically dispersed customers, and then connect these clustered bookings for service to tractor owners? And so that was kind of the tip of the spear for our market entry. There's a saying in the Silicon Valley tech community, which is come for the tool, stay for the customer, or stay for the marketplace. And we kind of took a similar approach where our tool, the bait to build up the supply in the market, was an application for a tractor owner to purchase from Hello Tractor, along with a monitoring device that goes onto their tractor that gives the machine owner the complete visibility around where their tractor is at all times, what it's doing, how much work it completed, the maintenance needs, fuel consumption and/or theft, which gives them the assurances to become comfortable with investing in tractors as an asset class. And then secondarily, once you have that supply in the marketplace, you then can turn on the demand side, where you begin to organize farmers and connect these organized groups of farmers needing similar services in the same vicinity at the same time with these tractor owners who are looking to not only secure their asset, but also increase the utilization and related revenue of their asset. And so that was our approach, and the assets that we use across the last mile to organize these farmers. We call them booking agents, but I heard extension agents mentioned multiple times already. Vinay mentioned it a couple times already. That's the last mile infrastructure, right? That we built our marketplace on top of, and I think it's important. And I'll echo Vinay's point around the need for collaboration across both public and private sector to leverage on those investments being made across the last mile to build out that infrastructure that organizes farmers into groups so service delivery can become more profitable. And also the distribution of inputs like fertilizer, seed, crop care, all this requires last mile coordination. And so echoing that point and the importance of that last mile coordination and letting that burden be shared across multiple actors so you don't have a situation where people are acquiring their own customers and that same customer who is buying fertilizer should be buying seed, should be buying crop care from a variety of other customers, but a variety of other vendors, but those vendors are also engaging with their own customer base. It's not profitable, it's not scalable. And I think that's a lot of the challenges that we see, even with the digital solutions, is we're all kind of building out our own customer bases and the customer acquisition costs are just too high to do that in a sustainable way. And the customer lifetime value is too low.
I just want to punctuate the point you just made, which is an important role that the public sector needs to play is coordinating farmers, whether that's through extension agents, whether that's through cooperatives, whether that's through some other function. But essentially, if the public sector can buy down the cost of coordinating groups of farmers, that then enables digital solutions, different companies to offer those services in a more affordable way. Is that what you're saying?
Yeah, exactly. And I think there's this ownership issue with companies engaged in agriculture, where you don't see as much sharing as you would expect. People want to own these customers and really be protective of these customer relationships, right? And it's a bit bizarre because it's not as if I can't really point to any company that's so incredibly profitable and successful, specifically across the last mile, right? That there's something to even protect. Right? I mean, what value are you afraid of losing there? I think the only way you can really become successful is to successfully sell your service or your product through the channel that you created. But then you should only hope that other vendors, other service providers come in and provide those supplementary products and services to continue to support that farmer in a more holistic way, to increase the farmer's productivity so they remain in the market, right? And, for Hello Tractor, yes, our farmers need mechanization. If we're lucky, they'll mechanize across the production cycle. But what we also need is our partners to successfully deliver improved seed varieties to that customer. Fertilizer and the adequate amounts of fertilizer with recommendations, right? Crop care. Financing, as Josephine was mentioning. And that's not something that Hello Tractor has any interest in doing. We have to partner with people to enable those services. And I think that's something that we're only starting to see more of in our ecosystem.
Yeah, thanks, Jahil. And it just reminds me, tomorrow when we have the discussion about the back end, one of the things that we'll be focusing on is the importance of exchanging data, sharing data. You mentioned this possessiveness over customers. I think sometimes there's also possessiveness over that data, the information about those customers and their plots and a whole lot of other things. And while data is being kind of transacted in the market, and so I understand that, there's so much richness and new value to be created when data sets are exchanged or paired within a context where the partners agree. So tomorrow we're going to be talking a lot more about data exchange and how that can unlock some new opportunities. So thank you for that. We'll come back to you. I want to go to Edwin next. Edwin, thanks for your presentation. I have a lot of questions I could ask you, but I'm actually going to pair my question with one from the audience. So let me just scroll up here and find it. So this person said, noting from Edwin that most digital for ag enterprises are not profitable or sustainable, what would it take to make them profitable and sustainable? So I want to pair that question. Obviously it's a bit of a stark statement to say that a lot of the businesses that are out there are not going to make it, although true in a lot of the sort of startup and technology space anywhere in the world. So if you could answer kind of what would make them profitable or sustainable, what are some of those key factors that they might be lacking, but also what makes you optimistic that we're going to have some market leaders out there that'll reach a lot of farmers?
The last one is easy. I'm not an optimistic person, right? Like the world is too difficult, too dark, not to be looking for what the bright spots, right? So that one's easy there. And in some ways, these trends are inevitable that they will go in that direction, right? So the digitization of agriculture is inevitable; it will happen. It's almost, from where I see, it's a question of time. And in similar ways, what is the use case that farmers experience will continue going through this bundling exactly for the reasons that Jahil mentioned, in that every single use case, the expenditure you need to make to acquire a customer, if you're just a single use case platform, and the lifetime, is too high, especially on the last mile basis, and the lifetime value of that customer is too low to actually build a real, a meaningful, long-term, sustainable, profitable business. That's just the reality of it. And so there are then a couple of potential paths forward. One is what you and Jahil started talking about on what are the elements that can be made public good, right? So you're creating a strong basis that other people can build. And we've seen players like the Agriculture Transformation Agency in Ethiopia do that, right? In providing core data, things like farmer IDs and ID systems, things like asset registries, platforms for payments, right? Some of these things have become ubiquitous, and so what you're doing is you're building the layer on top that is adding value and therefore able to capture that value. That is one side of things, and I think there needs to be a continuous conversation on what is the public sector doing to increase the amount of things that are public goods. That then means every single new player doesn't have to build it. In addition, part of the other thing that we're also seeing is this bundling, this bundling of services, and therefore these super platforms that are beginning to aggregate in different shapes and forms, depending on the country. Most of those have one large player behind it, and usually those are either a telco player, so a Safaricom with Digifarm in Kenya, or a financial services institution, so a bank like KCB is doing in Kenya, and trying to become that co-aggregator, or Equity Bank is doing in Kenya, or a technology player that comes at it from a supply chain, value chain perspectives. And so Alibaba is the kind of example that is already saying, here is the core thing that we are bringing to the table, but we recognize that by itself is insufficient, and we must find ability to provide these other services to a farmer, because ultimately you want to stack up the access to good quality inputs, the access to good quality information on what they should grow, the access to markets and that supply chain management and payments. You want to stack all of those things up if you're trying to transform the lives of farmers, and also able to extract value in the service that you're providing, right? And so that's what those super platforms are increasingly becoming, is that basis. And I think for anybody who has a single use case platform, you're facing one of two worlds. You're either facing a world where you partner with some of these emerging super platforms, and if you can white label your capability, and so you're in all of them, even better, but it's chances that you're going to be pushed to say pick one and not the other. Or you yourself will need to have the answer on, how am I providing the suite of services that a farmer requires, and therefore I'm able to, I become so sticky and I can legitimately own the farmer, right? Because right now single use cases are very difficult to own farmers, and people will have to think about that seriously.
Yeah. Thanks, Edwin. Maybe just a follow-up question on that before I move over to Vinay to ask another question. You mentioned telcos, and then you mentioned this alternative type of sort of super platform in the instance of Alibaba. I guess the quick two questions. One, do you see a non-telco super platform emerging anywhere on the continent that you'd want to highlight that we should all just be aware of? So that's one, just a quick one. And the second is just from a policy perspective. I mean, given the importance of those large players in general to the economy of any single country, especially the telcos, what kinds of public sector actions do you think, what do you think the public sector should be doing to both enable those actors, but also what kinds of watch outs or regulations might they want to be considering related to digital technology for farmers? So just if you have a quick response on those two would be great.
Yeah, so the use case that I've seen most is almost a bank-led use case, right? So KCB are trying to build out in this space. Equity Bank have been major parts of the agriculture ecosystem. CBA in Kenya, and all of these are Kenyan banks, but the equivalents in other markets. CBA has been a big player in the dairy value chain ecosystem, and so I expect. Part of what it requires is whoever is going to be the center of that super platform is somebody with already big, deep enough pockets that they are able to invest in the building of the capabilities, as well as the customer acquisition side. And where they already have customers because they serve them in a particular way in the financial services space, then it's much easier, right? It's much easier to go and say, here are the 500,000 dairy farmers I serve in geography in country X. What do you need, farmers, and how can I support you to be able to do more? Because you being a more successful farmer is good for me as a bank, because then I capture, your economic success is part of my economic success. Your savings goes up, your ability to buy different products goes up. But just as importantly, it allows me to crowd in additional ways I can capture that value as a bank, and raise the bar on how sticky you are a customer to me, right? So your ability to move from one bank to another is reduced, right? So there's a real incentive for those people to do it. So I'd say the examples I've seen the most have been telco-led or bank-led, and then you have the Alibabas of the world saying, actually, we think we can connect these markets and be much more efficient than other players. Your second question on public sector, I think public sector needs to, two broad things. One is what we talked about. What are some of those public sector endowments that you need to be creating that reduce the cost of building an enterprise on top? And to me, the big ones are, the ability to, farmer ID kind of system. So that I know, farmer number 205 is Edwin Macharia and he operates in this geography, that sense. The second one is making it easy for resources to flow between payers and those who are receiving money, and be it cooperatives or be it people who are selling milk or buying milk, those kinds of things. That is important to build. And the final one is asset registry, because the asset registry side, in some ways enables Hello Tractor to do better, because Edwin Macharia owns 3 tractors, right? That is valuable. It reduces how much verification Hello Tractor has to do in that asset registry side, and now they can build that additional layer on top. And so anything the public sector can shift in that ecosystem would be valuable. The big watchouts for me are always, the voices of the smallholder farmer can be muted in public discourse, because they are spread across the country and they don't have as strong representative versus a telco that's able to spend time and knock on doors and access, the senior most leadership, a minister of agriculture, a minister of finance, a head of state, right? Or the financial services players, right? And so how do they make sure whatever policies they're creating actually make sense for the smallholder farmer versus make sense for the person who's playing that intermediary role? And that to me is the big watchword or big thing or big questions from a policy development perspective. That's one. The second one is being nimble in building policies that actually make sense. And I think we all recognize the policy making process sometimes takes too long, is too slow, and is potentially captured by big interests. How do you shift some of that dynamic by increasingly putting the smallholder farmer at the center and saying, these are majority of the citizens we're trying to support and trying to serve. How do we maximize the benefit they get? Because if they do well, then it lifts all boats going forward.
Thanks, Edwin. Yeah, and the policy process moves slow and tech moves fast, so we often get a little out of sync. New issues come up and we haven't even dealt with the old ones. So thanks for that. Vinay, I'm going to go over to you. There's 2 questions here for you. One that's coming from the audience and one from me. So you're seeing a lot of different models being tried in several different counties. I'm curious, what are you seeing as some of the success factors across models? What are things that are kind of common that you think are maybe a trend we should all be learning from? And the second is a question, if you could comment. There was a question that came in, I'll kind of summarize it, but basically this idea that when it comes to advisory services in particular, when farmers are already paying for something, seeds, tractor services, something else, you can bundle those information services on top. And because there's a history of public extension, a lot of times farmers also expect they should get access to information. So they see information as a service that's a free service, a public good. But that's not always something that governments have been able to finance to reach every farmer. So there's this question that's basically, in the absence of a bundling arrangement, are there scenarios where we can motivate farmers to pay for access to extension? So if you could speak to that just from your perspective, and then also give us some sense about the success factors across the different programs you have operating, that'd be great.
Yeah, thanks, Alicia. In fact, this also answers the question you'd asked to Edwin. What should public sector do? In my sense, I think 3 things are important. One is, Jahel made a very, very important point that farmer data cannot be in the hands of one private sector entity. So I think public sector should invest on creating a farmer database so that that doesn't become a private good, but that becomes a public good. And actually in counties where counties have got this farmer database, and as Edwin said, are able to point out, Edwin is a mango farmer with 2 acres in this ward of this county. It's making it easier for the ag tech startup to really be able to reach out to that farmer. That's the first investment. The second investment is specifically for smallholders. I think it's very, very critical to organize smallholders into farmer producer organizations, because for the ag tech startups, the transaction cost is much, much higher if they have to reach out to 1,000 individual farmers who own, say, 2 acres, as opposed to reach to one farmer producer organization, which consists of 2,000 farmers, but having an aggregate land holding of, say, 5,000 acres. So, and that cost, I think, has to be borne by the public sector. And that's where, again, counties where we have dairy farmer producer organization, counties where we are seeing farm producer organization of avocados, of mangoes, our active startups are able to reach out to these farmers better, and that working relationship is very, very important. Third, I think, to be very honest, is really the attitude and the mindset to say that, look, this is the way forward, and so we have to really shed inhibitions and partner with the private sector. I think these 3 are some of the most important success factors we are seeing, which will determine whether this, in a particular county, these private sector partnerships are working well or not. The second question, I think I'll answer it in 2 parts, Eliza. First of all, I mean, whether it's a Hello Tractor, right? A Hello Tractor is a clear service that farmers are able to access a tractor, which improves the efficiency of the field operations, right? So there the farmer is willing to pay, actually. Access to input, seeds, fertilizer, the farmer is willing to pay. Access to markets, if the farmer is able to see that there's a delta in terms of the price that he or she is getting, they're willing to pay. So the only question remains is that of what I call pure extension, that this is what needs to be done to control this pest, or this is what needs to be done in terms of seed spacing. So that, I think, again, bundling is the key. I think what will be essential is to come up with bundled service delivery. If you look at the dairy value chain, can we bundle AI service provision with extension information? Can we bundle vaccination with extension information? If it's a mango kind of value chain, can we bundle financial services with extension information? Can we bundle market linkage with extension information? I think that's the way forward. But I think it's not that big of a problem, because I think 80% of the services which are being offered by these active startups, I can name several. JHEL is there. We have an active startup called DigiCow, which enables farmers to access AI services. We have, something like True Trade. We have an Shambhav. All of them are providing an actual service, and farmers are willing to pay. We don't see that that big of a problem for that. The problem is if only you're delivering extension, and that's why bundling becomes critical. I'll end here.
Thanks, Vinay. And it sort of suggests to me that in the future, if we follow your logic, the public extension service needs to start thinking about some of these service providers that are bundling the extension information as some of their key, I don't want to say clients, but they're going to need to figure out how to package information that can be disseminated accurately and rapidly, in fact, when things like pests or diseases hit. So there needs to be kind of a shift in the mindset. They are serving farmers, but they need to serve entities that are going to be the delivery channels to farmers as well. Yeah.
Absolutely, Alicia. And to be very honest, extension is a public good in that sense, right? Actually. Market access or access to seeds, it's a private good, but extension is generally a public good. So there's no harm looking at kind of extension as a public good. And also, I just want to make one point. One of the key lessons from our experience of promoting these partnerships is for JHEL to grow, or for any of these active startups to go, I think you need a combination of grant funding plus access to credit at reasonable interest rates. I think that's the way to go. There are agencies which require grant funding to start, but not significant. But as they grow, they also need, access to credit at reasonable rates. I think that's something one needs to look at.
Thanks, Vinay. All right, Josephine, I'm going to come to you in a moment, but before I do, I just want to ask the organizers to put our second polling question up, which is more of an opinion poll for the audience in terms of, what sectors do you think have the greatest need for agricultural solutions? We'll come back to the answer for that, but just wanted to check in and also mention we have about 15 minutes, a little less, before we wrap up the panel. So I'm getting to your questions as I see them, but feel free to submit them if there are some last minute questions coming in. Josephine, there were some things that you mentioned that I think I want to come back to because I didn't hear them as much from the other panelists. And there was a question, in fact, that came in on one of these. You mentioned youth, and you also mentioned how women and men, you mentioned women specifically and how they're accessing services as well. So my question is, one of them is around, have you seen adoption of digital services or access to digital services varying between women and men? Can you talk a little bit about what you've seen, especially because you're talking about financial services, and we know how transformative it is when women can actually control some resources and sales and things like that. So if you could talk about the gender differences you've seen in sort of adoption of technology that you talked about. And the second comes in from a question from the audience that essentially is how are public, private, and social organizations viewing the potential of youth in farming families and their influence and access to using technology services for cost? So are they seeing this as a target or focus audience? So you mentioned youth as, they're attached to their phones, as we all know, but are you seeing that actors like government or private sector are noticing that and are targeting youth specifically for services and trying to utilize that energy? So gender question about services and then also about youth, if you wouldn't mind. I think you're muted, Josephine.
Yes, thank you. All right. Let me talk about women and youth. And yes, when you look at services, especially the mobile money services and the access to finance, we realize that women are now more independent. They're able to borrow. You understand that the mobile money now you can borrow individually and actually do something and then sell what you're doing and do trading and pay back. And so we've realized that in terms of borrowing, that the women are actually more likely to borrow and pay back. The youth have tried it and realized that it takes a lot more work because when you borrow, you need to pay back. You need to have a strategy to pay it off. And so that's becoming something I think that we are beginning to educate them on, that they need to realize that there's got to be an existing business, you've got to have a strategy, and you've got to be able to pay back. So the difference between men have access to capital. They don't see it to actually borrow directly from the mobile phone. And therefore, as we continue with the strategy that we've seen that the mobile phone companies are now actually microfinance institutions, we're going to see a lot more women actually getting in. And because of their credit history of repaying, they should be able to access bigger loans, access better inputs, even as cooperatives. And that makes a lot of sense. When we're talking about the question of youth, how public, private, and social organizations are viewing the potential of youth. If you look at it, majority of the service providers, youth want returns, and they want quick returns. They want to be able to see the businesses running. And so investments have been done by, by governments especially, and the private sector. We've been working with developing the last mile extension in terms of providing services in terms of extension, but also providing inputs, developing young people, having them access credit, linking them to bigger agro dealers, and actually starting up their small businesses through the leaders they have in terms of the network of farmers. And we've seen that the government is actually quite interested in that, and other public and private sector, private sector, actually interested in developing them. So when you look at it, you look at the fertilizer companies, the seed companies are actually taking time to invest in those youth right now, once they realize that it's actually a model that works. And then, of course, working on trying to see what we've noticed is especially for payments and especially for commissions and stuff like that, we've noticed that private sector companies are actually willing to put up digital platforms that are able to support their delivery of information and services, and also to support those young people. So it's actually something that we've seen that is happening. Just to comment a little bit on the issue of the policies in place. If you look at in Tanzania, to be able to have the costs actually coming down for everybody to be a player, you realize that the banks have to be involved. The reason why there's a platform that's currently being set up by the Bank of Tanzania, which is the Central Bank of Tanzania, that will have everyone having a level playing field. Costs will be down in terms of transacting. It's actually a transaction platform that actually works for everybody. I understand, of course, the control issues, but it also helps to bring down costs, therefore enabling the banks, the mobile phone companies, and any other transactional issues to happen without really, which encourages the youth to actually provide those bundled services. So in as much as we're talking about service providers, we're talking about innovations in terms of digital and IT people, but we're also looking at the IT part, the platforms that are coming up, the IT part being run by young people, but also collaborations being done with the small businesses that are actually providing those bundled services. Thank you.
Just wanted to say, such a good point. Let me make sure I understood this correctly. So you're saying a common transactions platform is a major policy step in the right direction, so that it lowers the cost for every player, including small businesses who wouldn't be able to sort of build their own custom platform. Did I hear you right?
Yes, and for smallholder farmers, because that's really, yeah.
Really great policy recommendation, and we caught that. Thank you so much. Jahil, I'm going to come to you, but as I do, I'm just going to tell all of our panelists, the way I'm going to close the panel is give you all sort of a last word after I ask Jahil this next question, and then I'll report back on what the polling results found, and we'll close out. So start thinking about your last word, something you can say in 30 seconds or a minute. Jahil, I just want to ask you about what difference COVID-19 has been making for your business and for farmers you're working with. And in just thinking about our audience, we know the AU is going to be meeting in January. COVID's going to continue to be top of mind. What kinds of actions do you think could support resilience for farmers, resilience for businesses like yours that serve farmers? So if you could just give a little overview of how COVID's been affecting them, and then what you might want to suggest as a call to action.
Thanks, Alicia. Well, I would say that for Hello Tractor, COVID, the pandemic has been somewhat of a blessing in disguise. And what I mean by that is we've been around for about a little over 5 years now. And over those 5 years, everything has been go, go, go. Just in terms of acquiring new customers, building new innovations on our platform. And we never really took time to pause and assess where we were on the supply side of our market with our tractor owners, as well as the demand side, our farmers, who are the most important, their foundation. And so during COVID, we had an opportunity to do everything from implement our digital transformation strategy, which was collecting dust, to think about our roadmap in a more tactical way and strengthen our back-end infrastructure. I know this was supposed to be a panel that's more technically focused. And so, implementing things like microservices so we can scale and prepare for, some of the large deals with some of our tractor manufacturer customers was really important. And we just didn't have time to do it, in 2019 and 2018, as you're just constantly going. And so COVID-19 really forced us to take a pause, stop putting out fires, and think more strategically about how we engage with our customers on both sides of our marketplace, strengthen that technology transfer and how we communicate value to our tractor owners, while improving things like the Net Promoter Score with our farmers who are receiving the services from our tractor owner customers. And so 2019 gave us that breathing room to do that. And we've already seen results, right? We've already seen significant improvements in our Net Promoter Score. We're almost at 90% NPS. I think we just did an assessment in Nigeria where we have a little over 2,000 tractors servicing a little over 400,000 farmers. And in that market alone, we're now up to an 82 Net Promoter Score, when just a year ago, we were at below 50%. And if for anybody that follows or is involved in ag tech, Net Promoter Score is the gold standard of customer satisfaction. And when you start getting north of 80, you're doing something right. And so that was a real unintended consequence of COVID-19. And as far as my parting words, Hello Tractor is all about partnerships. We're here today, servicing the number of farmers that we service with the equipment that we have on our platform, because people decided to believe in a vision and a dream to mechanize smallholder farmers when most people thought it wasn't possible. So we're very open to partnerships, and I would encourage anybody who wants to engage with Hello Tractor and be a part of this journey to go to hellotractor.com. We're excited to engage with new partners who can own their own marketplace within the country, where they might see tractor owners who can benefit from the technology and farmers who need services in their network. It's a great franchising opportunity to earn some income while delivering some sustainable, lasting impact. We'll be excited to partner with you.
Thanks, Jahil. Great parting words, and we're so glad to have you here. Really great contributions. And I'll be following up to partner. We want to partner with Hello Tractor.
Always welcome.
Thank you. Thank you. I'm going to check in. I think we lost a couple of our panelists. Is Edwin still on the line, or did we lose him? I think we might have lost Edwin. Josephine, I just want to come to you for some parting words before I give my final words. Anything you want to say to sort of wrap up your panel and make sure the audience hears?
Okay. Mine is simple. Mobile devices and platforms connect smallholders to markets. So connectivity is not only access to information, it's about access to services. And we've agreed that we need to bundle them. And also it's access to mobile banking, because mobile banking can give farmers and SMEs access to formal financial services and loans that they lack. Thank you so much. And I think that is it. So we just need to look at the whole bundling issue, work out how the services can be done. And then, of course, the public goods, definitely. Investments need to be done with them. A lot of lobbying, a lot of policy action needs to be done. Thanks.
Thanks, Josephine. And just a plug for tomorrow's panel, we actually have someone from Vodacom, from Mezzanine by Vodacom, appearing. So we will be speaking with a telco tomorrow that's developed some of those bundling services. And they're projecting Henry here on the line. I think we're wrapping up, but just for those of you who will be joining us tomorrow, Henry will be doing some wrap-up remarks tomorrow, along with our other panelists, one from Agrimetrics, a UK-based digital platform company. I already mentioned the telco, and then Digital Green will have our platform architect for a product called FarmStack tomorrow. And I'm not sure we got the results back in time. I think we've run out of time, but I just want to say thank you to all the panelists and to the organizers for today's conversation. We've been taking notes. We'll be putting together a brief on this that'll come out after the next 2 days, and we heard a lot of really concrete policy actions. So thank you to Vinay, Edwin, Josephine, Jahil. We're so thankful to have had you here. And thanks to the audience for your great participation as well. And if you want more Vinay is on the next panel for digital technology that Mercy Corps is hosting, one of the side sessions. So go track him down. That's why he had to drop off early. So thank you all, and hope you have an enjoyable rest of the conference. Signing off from Digital Green. Thank you.